Hello everyone, welcome back to the channel, updating some levels, some fractal support and resistance levels for you today, and of course adjusting some of the patterns and trying to decipher where the market goes next. We have a couple of data in a few moments. We have in fact United States CPI and core inflation rate in 12 minutes, so the market may shake for a little bit, so pay attention to those events. Also, we have the Dixie inside the range that I identified yesterday for you, so between the fractal resistance at 101.91 with support at $100.51. So this is the range for the Dixie, as I was expected or suspected. The Dixie entered into a small period of consolidation. Let's see how long it will last, so possible triangle information above this monthly fractal support level. Let's see how the market unfolds. We have a bullish crab pattern projected at $91.81. That's a pattern that I'm expecting to see format for the Dixie. Without taking longer, you have a video from yesterday at the top corner, top right corner of your screen. You have a link for that video related to the Dixie if you want to explore more. Let's go into another Forex pair. Let's go into the dollar versus the Norwegian krone. We had a nice alt-bat pattern completed at 1044, triggering this bullish momentum. I'm expecting a pullback after completing this ABCD pattern, basically a retest of these previous fractal support levels. We are now facing that same level, now acting as resistance. So I assume the market may face a pullback without ignoring the possibility. Let me try to draw this more correctly, but without ignoring the possibility of a bounce from this price zone and starting to unfold into what we may call later a three drives pattern, a new higher high, just to complete that sequence, and then eventually a deeper pullback. That's one of the possibilities from these levels, but I do expect a retracement at some point towards the 38% Fibonacci level. If the price prints a new higher high, I need to adjust my retracement levels to those highs, but at some point I will expect that pullback for the dollar versus the Norwegian krone, specifically now that completed the bearish ABCD pattern, also suggesting the potential retracement. Now we have the Swiss franc. This may unfold into a lower degree head and shoulders pattern formation, an inverted head and shoulders pattern that may trigger a move eventually later towards 86.37. We have nice signs of divergence at the lows, multiple indicators suggesting those with those signals. We have divergence holding those lows, so we admit that a violation of the resistance levels may trigger that move to the upside. Of course, there is always a risk to invalidate this sequence or to vanish with these eventual edge and shoulders or inverted edge and shoulders, and if the price starts to break below these levels of support, specifically 84.19, the intraday fractal support level, that may favor, of course, the continuation of bearish momentum. So pay attention to the fractal levels already adjusted and updated today. We have also the dollar versus the Canadian. Previous structure support level is now acting as resistance, so we may see the price starting to pull back. One of the reasons why that may happen is also because crude oil completed the bullish deep crab pattern that we projected before at $67.24, completed and reinforced it already, at least for now, with a new fractal support at $65.65. So we admit, or at least I admit, based on the formation of this pattern, a move towards $71.27 for crude oil. We have also the dollar versus the Japanese yen. If you go into a lower time frame, you can see these in a perfect formation of a bullish alt-bat pattern at 113% Fibonacci extension level. So we are facing the completion point of a bullish alt-bat pattern, and we do expect a move towards the 38% Fibonacci retracement first target level, and then we have a second target placed at the golden Fibonacci retracement level. Notes, all the yen pairs are facing I don't want to say crucial, but important Fibonacci levels. Some of them, as the dollar completed the bullish alt-bat pattern, the euro versus the Japanese yen, actually the dollar versus the Japanese yen, and the euro versus the Japanese yen both completed bat patterns. The euro yen above the previous support 88.6% Fibonacci level completed the bullish bat pattern. 158.70, that's the default target level for that specific pattern. The Aussie facing the golden Fibonacci retracement level, the pound facing the golden Fibonacci retracement level, the New Zealand also golden Fibonacci level right below a new fractal support already printed at 86.44. The Canadian also bouncing from a new fractal support 103.47, golden Fibonacci 104.47. Let's move forward. Euro versus the pound daily, actually intraday resistance now under pressure, 84.47. A move towards the 38% Fibonacci is expected based on the formation of this pattern that I pointed before. And also pay attention to these support levels. If the price starts to break those levels, may trigger that bearish flag pattern that we have here. We may track this something like this, a bearish flag pattern. If the price breaks the support levels, it will put at risk of lower prices. Euro versus the Aussie, nice reaction to the bullish butterfly pattern completed before, and then a move towards the default target levels, 38% Fibonacci level. This may act as a pressure zone for the pair, so I will expect a pullback from this price zone. Now forward into the commodities. Gold fighting previous fractal resistance levels, 25.29 intraday or daily fractal resistance, and the major resistance a few points above at 25.31. Any violation of this resistance level, and it's not been easy to break above it, may trigger a bullish momentum for gold. We have also silver approaching the highs, not enough to consider the formation of some patterns that I have projected for silver. Before we projected the bullish crab pattern, a nice reaction to the upside, forming a new fractal resistance, 29.17. That's the important level to consider. If silver finds a way to break above this daily fractal resistance, that may trigger a retest of these previous hedging shoulders highs. That will also complete the bearish shark pattern above. That shark pattern later we will be here for sure discussing this pattern if the price completes the sequence, but that pattern may suggest a retracement which may offer more support for momentum. Of course, at these points we will observe the market, because two things may happen: or the market finds support for more momentum, or the price breaks lower and will trigger a deeper retracement or a deeper pullback for silver market. But for now we are far away from those patterns. Of course, this is pure speculation. We will be here for sure tracking and monitor these patterns or these potential price behavior. This is the potential bearish shark pattern on silver if the market finds a way to break above the resistance level 29.17. That's the price that we should consider. Now, SPX 500 potential V-shaped recovery, just a question. I'm not arguing on that possibility, but that's one of the possibilities for sure for the SPX 500. We have been used to those sequences, fast and strong recoveries. So I will admit that the violation of the fractal resistance at 54.99 may trigger momentum for SPX 500. We have also a nice fractal resistance to consider, not documented in my chart at this point, but we have resistance at 55.55, so that's a new fractal resistance above, and actually that's also our previous fractal support level. So we have a pivot zone to consider for SPX 500 if achieved. 55.55, that's the previous resistance and previous support level to consider for SPX 500. Eventually, even an inverted edge in shoulders, I will pay attention to that possibility. The left shoulder, the head, and eventually a pullback after retesting, after reinforcing this resistance level that may trigger an inverted edge in shoulders formation. Nice V-shape unfolding for SPX 500, assuming a violation of the resistance.
Hi, my name is Blake Morrow, president and co-founder of Forex Analytix. If you're watching this video, that means you're in search of a trading coach, a personalized coach that can help you get to where you want to get in the markets. Whether you choose myself or one of our other well-qualified coaches, it's up to you. Every one of us comes from a different background, and every one of you looking for a coach comes with different needs. So make sure you go through, peruse all of our coaches, read their bios, watch their videos, see which coach is going to be best suited for you as an individual trader. And I'll see you in the coaching session.
Let's jump into the German DAX. The German DAX has found a new fractal support, 18,188, and assuming very much the same situation for the German DAX, if the price breaks above the intraday resistance level 18,493, if the price breaks above these levels, of course we will track the potential false break of the support level. Pay attention to this eventual break of this resistance level, because right above we have a very sharp pattern projected at the golden Fibonacci extension level. So this is a level where the price will complete the shark pattern, and as we can see, we have also the 61.8% Fibonacci retracement. So this is a retracement from all these move to the downside, so this is basically the 61.8% Fibonacci level converging with the golden Fibonacci extension of the last swing low. So that's a nice cluster box to consider if the German DAX finds a way to break above these resistances. Let's finish for today with Bitcoin. I do expect more bearish momentum. Let me increase my time frame. I'm waiting to see a retest of this previous structure in fractal support levels. As I mentioned before multiple times, I'm waiting to see the golden Fibonacci extension level 5,600. So I will assume this sequence, I'm assuming this as a potential 5-wave structure to the downside, where wave 5 equals wave 1, following the theory, or the Elliott wave theory, or the very basic theory on the impulsive 5 waves structure. And in this case, to the downside, I will project a symmetrical wave 5 equal to the wave 1, and that points to the formation of this bullish crab pattern below the golden Fibonacci extension. Basically, I want to see a retest of this weekly fractal support level 49,577. That's the most recent fractal support level for Bitcoin, but there's always something else. And at this point, and based on what we see at this moment, we can also identify what we may call an inverted edge and shoulders pattern. So basically we have the intraday or the daily fractal resistance at 58,070. That's the resistance for Bitcoin. We have targets for that pattern with a clear breakout of this resistance at 62,843. So that's the default target level for the inverted edge and shoulders for Bitcoin. If somehow the price finds a way to break above this daily fractal level. That's all for today. I hope you enjoy and take some valuable information from the content that I share here. Consider subscribing my weekly newsletter. It's a monthly subscription, and every week I will send you updates on these markets, and not only very particular and specific patterns to consider for the week. So it's just add more value to your judgment of the market. So it's a different perspective of the market, and I think it can bring some value, at least for some of you. So I hope you enjoy, and of course press that like button, subscribe the channel in order to get notifications once I publish more content here. I hope you enjoy it. Stay well, have a nice trading week, and I hope to see you in the next video.